as the Fireside chat topic, which is the real Indian borrower, what the credit playbook miss, trying to stick to the script. Yeah. So before we start, I guess I would love to, Pankaj, from your side, would love to understand that, how is this Godrej group, as in Godrej Credit and Godrej Finance, how are they, how are they placed? What you do in the housing finance? What do you do in the Godrej Finance? So that, people at large would be able to understand more about the group per se.
Sure, thanks. Uh, I think we right now we have an agenda in the country to make sure that financial inclusion reaches the deep pockets of the country over a period of next decade and more. We do housing finance business. We have NBFC. I run NBFC, and we also have housing finance company. So I built both the businesses together, and now we are on the path of making sure we do SME credit, unsecured and secured in NBFC. We do housing finance, prime housing in few parts of the country, and we also have started recently affordable housing finance. Our business is 4.5 years old. I am 6 years old in Godrej Group. We took some time to start up the business. Business is profitable. And our borrower is MSME, starting from a shopkeeper level to as large as mid-size SMEs or large SMEs. We do this via different products, unsecured and secured. And I think right now we are in 50 to 60 markets. We have established a completely tech-driven organization which believes in complete, customer obsession, where NPS is the key game changer for us. We live our customer every day. Our signature strengths are few. I'll just delve upon designer EMI as the industry-leading new initiative which we started in 2019 and 2020. A lot of leading players in the country have copied that. Designer EMI is a open architecture framework for customers to buy a home, where customers can choose their EMI based on the fitment they have. It can even be lower than their expectations. And we also do a few more things. Being Godrej culture, we are an inclusive culture in terms of not just financial inclusion, but also inclusion of all kind of employees. When I'm saying all kind of employees, women, PWD, LGBTQ, we have gone to the extent of making sure that there's no discrimination at workplace with anyone. PWD, for example, we've made changes in the bathrooms for adjustment of, for their convenience and for making sure that everyone in the company is given full importance and not just, only business being the top priority. So few more initiatives, ROE for women borrowers, that is our anchor initiative. We also do biz rewards. So not just only NBFC, but NBFC and HFC with a view that in 2016, 17, and 18, few NBFCs and HFCs have seen bad times, and industry overall in NBFC and HFCs have seen trust deficit in the sector. So the way Godrej Group has brought trust in real estate, Godrej Properties is doing really well, and we are leading company in the country. Godrej Capital is the brand, and Godrej, NBFC and HFC both are profitable, and we both companies, I think NBFC is leading in SME space. We hope to be one of the market leaders in the next 5 to 10 years. We are already on the path of growth.
The best to you. Coming to the topic, what do you think truly represent the real Indian borrower, and how has the borrower evolved over the past, decade or so?
So when I say true Indian borrower, I think we look at it from the lens of total number of borrowers which are registered, or I would say MSME registered in India. They are about 64 million plus, which is a very, very large number. Post-COVID, this number has come down, but it's a very, very large number compared to United States and China. China's number and United States numbers are also equally large, but not more than India. 54 million is the MSME number in China. but still their economy size is very large. So that contrast of United States being a $34 trillion plus economy with MSMEs at somewhere around 35 to 40 million MSMEs, and China is also 7x of our economy. So this says completely the story that 64 million MSMEs, if they can potentially bring the economy size of $20 trillion and $30 trillion, if it is happening in United States and China, one day in India it will happen. So the only thing I think is broadly missed is complete suite of financial services products to across the country. The second thing which is very important, I think, along with this is, Himanshu, my sense is India's manufacturing sector is on a fast track now versus 30 years. Today, Mahindra cars, Tata cars are at par or better than the international brands. So this has never happened in India. I think in the next 5 to 10 years, if manufacturing takes up that pace and financial inclusion also goes deep in the country, then we are on our path of becoming in 2047 and in 2030, the goals of $20 trillion economy and $10 trillion economy. I think we can do that for sure.
What are your views in terms of the real Indian borrower, which is today is very young, aspirational, their aspirational needs, they want quicker, faster decisions, and so what is this young and aspirational, if you want to throw some light in that side of the real Indian borrower regime?
So first of all, India has evolved in the last 2 decades, 2005 versus today, I think from both the sides. Side number one is companies side, where as an organization, can we lend money to borrowers? And I'm talking about entrepreneurial mindset DNA of underwriters, chief risk officers, credit heads. So one side challenge is that. The other side challenge is when people take loans, how do they behave with the money or credit access available to them? And in my understanding, the business models are changing rapidly. For example, e-commerce has multiple interdependencies of the sellers versus different supply chain stakeholders. And then there is also a need, very important piece in the ecosystem in the last 2 decades. What I have observed is borrower is willing to judiciously use the credit.
Right.
Subject to the second part of the scheme, which I was saying, that if organizations also evolve with their traditional, or I would say conventional wisdom, converting into strategic asset. For example, everybody is talking about AI, and if borrower is willing to use credit judiciously, can we select the borrower in a rightful manner where we can give right amount of loans to right set of people and still make money from both the sides? So SME growth capital helps SME or MSME to grow business, and along with that, we also as an organization, I'm talking about, make money out of the business, and it's an everlasting cycle. So the credit hungry customers today, I see they are using their judicious, I would say, judgment to kind of make sure that the loans they take only when they need it and not just for the sake of the personal needs. And I think India has evolved. Young borrowers, in my understanding, young borrowers are those borrowers, one is age, second is other than aged borrowers who have never taken loans. So I think financial services ecosystem is getting much more comfortable with giving loans to those people who do not have credit history. And thanks to the models we've created, GSTs of the world, account segregators of the world, and technology in India has evolved to a level where we can underwrite a customer without having the credit history. So it's a very good evolution happening.
So large business in this segment which you are referring to comes from the tier 2, tier 3 towns, So what are the challenges you think when you market yourself in these semi-urban, rural kind of market? What kind of new challenges you see, in making yourself operational into these cities?
So first challenge is, I think, the intent of the organization to be in the long term. Most of the organizations believe that, and I've sensed that in banks also and NBFCs also, that India lies in top 20 markets, which is a myth. India lies in, we all know that post office is having 160,000 codes, PIN codes. I'm talking about SBI has more than 25,000 branches, and few large banks have much more in thousands of branches, which tells us the story that India lies in those tier 2, tier 3, and tier 4 towns. The biggest challenge for companies, and if I talk about my assessment and judgment, is cost of operations and productivity. On the other side, the challenge I see from MSME side is their willingness to upgrade uh, and cope up with the pace of the industry. For example, we have an initiative called Nirman. Under that initiative, we offer free services also, which means we want to grow MSME's business. Any MSME who wants to have Amazon tie-up for global selling products, we offer that free, and we want them to grow their business. But the question here is the effort to educate MSMEs that, we just don't offer loans, we also offer these services. We have an intent long term to help you to grow your business. I sense that the pace of, I would say, upgradation, graduation, understanding, adoption of technology from MSME's end is also a challenge. And from our end, the opening a branch, having 20 people, making 20 people work, and then, the biggest challenge is I need to travel to Trichy. I think 2 times Trichy, one day, what we'll do. But I think we are changing the mindset of the company. Just to share with you, I've started an initiative called Speak Your Mind, and every week I connect with each branch of the country for 1.5 hours, discussing no business, only discussion on what are the challenges, MSME's challenges and team's challenges, and I'm loving it. So for next probably 10 years, we continue to do that. It'll help us.
Say you get the time to do that.
I have to. I mean, if we have to make long-lasting business, and Jim Collins' language, like build to last, we are building. We need to do this deep engagement with our people, and so far I'm done with 11 and 12 sessions. I hope next few years we'll continue to do more.
So we talked about first-time borrowers. What do you think, should be the new lending products, and what kind of changes in our, conventional lending products we need to do to make sure that, we are meeting the requirements of these first-time borrowers?
Yeah. So I think there are two things in this piece. First thing is all kind of products which can help underwriting teams, business teams to gauge real worth of the customer. In India, the biggest challenge is to assess the real worth of the customers. How do you ask somebody a difficult question? Sir, how much net worth do you have? Now, if somebody says, I have a net worth of 5 crores, and if 5 crore you want him to or her to substantiate, it is very difficult to substantiate CA attested net worth or what net worth. And that's what is the, I would say, traditional challenge. And if we are able to create a model, and we are working on that to create a model, we have done that a bit, and we are working to do that. How do you gauge customers? 3 dimensions. One is bureau dimension. The other dimension is business competence. Where is the business standing? The third dimension is the future prediction based on the past data available. Now, these 3 things we continue to evolve. If we are able to do that, I think we'll be able to solve this at a larger level. The second piece, I think, which is my wish and not a compulsion, is I think in India, we have to graduate to a level where we give loan for startups. I don't think in India right now we are having the products
When
to
you're
give.
saying startup, you're talking about the MSME, the smaller businesses.
I'm.
Not the startup.
And it has nothing to do with my current role, my company, and the work. But my sense is our graduation at some point has to happen. That somebody wants to start business, there should be a product, and industry needs to solve. And that's why I'm speaking at Industry Forum.
But I remember when we used to lend in the ICICI or HDFC days, we were told that we are not a venture capitalist.
true,
You need not to lend for any new business starting. So, because
My wish is
you
at
cannot
one
judge
day-
the cash flow. So how do you think we'll be able to manage and sense the future of the business? Because we are referring to a very small business, which is, not, that's a run of a mile kind of a business, where everyone is having so there are multiple departmental store, general store, and somebody is going to open a very small general store. How will you sense that what kind of cash flows will be able to generate?
Yeah, but my sense is in India, in all businesses, and let's say, since you've done construction finance, let me give you an example of construction finance. In India, construction finance to builders, is available from 20 to 24% to as low as 9%. Now, why is this risk modeling changing? The risk modeling changes because the risk at the time of acquiring a land and at the time of inventory funding changes completely. Now, the same way in this model, which I'm saying that at some point in India we will evolve, and somebody wanting to do business at some price with some capital, and it's not just VC or somebody is taking the equity. I'm talking about this piece. I think that's where we need to at some point go and
Very good.
take the bet.
Yeah. So, as we were talking about the first-time borrower, so you don't have the CIBIL data, so there's not much of a bureau data available, and at the same time, the business is also not giving you a very good sense of cash flows management of that business. So, how do you think, what are the new engines which should be brought in to judge the assessment of that business? Because that's very, very tough for a first-time kind of a borrower, especially when you are into tier 2, tier 3 kind of a market.
So it's not tough. Delhi is a very beautiful city, and I have built my career out of Delhi. I was in Delhi from 2007 to I think 2013, and I have seen, I jokingly say this, I've seen every gully of Delhi and met about 8,000 to 10,000 SMEs and MSMEs, starting from Gurgaon to Bulandshahr industrial area to all the places, Samayapur, Badli and all that. So I can tell you, you don't need bureau to give loan to a customer. I mean, and what tells me, from my inner consciousness of being, been in business for 2.5 decades now, is the 99% loans, confidence, and I'm not talking about paper, I'm talking about the reality. When you just land up at customer place and meet customer, your whole theory about customer changes. And for example, we are first time meeting, but we know each other for long. As we meet and as we greet each other, we change the perception completely to a reality. So I would have met 6,000 to 8,000, maybe more customers in person. My sense is when I landed up at customer place and when I start interaction with customer, 99% the view before coming to customer place and after
agree. Sorry, I'm interrupting. I completely agree. But then, don't you think, Pankaj, this is very counterintuitive? Because at the end of the day, we are talking about technology, faster decision, and at the same time, we are talking about the conventional model of touching the customer, getting the sense of it. So that's where you cannot leverage the technology and you cannot grow. And the next question, which is in line with this, is that how you think Godrej Finance is leveraging technology and data analytics to design lending products. So and the new customer.
So I'll give you an example. I'll give you an example, and it's a very valid point. I have a Mercedes, and when I want to park my car, I can press the button and say, "Hey Mercedes, park on your own." But I don't use it. I don't use it. I'm used to use. So the option is there. That's one thing. The second thing is PDs and these discussions, tele PDs and video PDs, even today, as per RBI, if you are giving credit card to somebody, if you are giving personal loan to somebody, analytics is helping you to get the sanction done. AI is helping you to do everything. Face ID, ABC, XYZ, you do Aadhaar, you do PAN Aadhaar check, all that NSDL checks you do. But eventually, the process of regulator ask you to have a video call with the customer and show the PAN card, आगे से दिखाओ, पीछे से दिखाओ. So, to eliminate fraud, to ensure compliance by a regulator, to do, let's say, management of loan size of 25,000 to a 25 crore loan, the game changes completely. Now, somebody wants to give 10 crore loan against property. For example, I do some bit of construction finance also. So if I do 10 crore loan against property to somebody, MSME, and I want to do everything digital, there is a chance that I miss the bus on collateral. For example, somebody is staying in the property and the property doesn't belong to the person. So there are nuances of business. We still need to have, hey Mercedes, park the car. But we park the car or we don't park the car, it's a choice we need to have. Our car is having that feature of auto park. It's good enough. But I would use it or not. I mean, that's the judicious call I need to make.
But don't you think then, we are in the same vicious circle where we want to have, basis our conventional models, we want to have, a touch feel, but then how will we make this secured business grow faster and, the scale of economy, how will, that come into function then? Although we have almost closed the time. So if you can just have a quick.
So it's quite good question, and I think we all must ponder on this. In 1992, my father is a tailor in Punjab. So I used to ask my father that why did he take loan of 20,000 rupees from Canara Bank? He had to make 20,000 chakkars to Canara Bank for n number of months. Now the question here which you are asking, and the answer for that simply is that loans on the basis of technology, in India 30, 35 years back, it used to take many months. And some 20 years back, it used to take quite a lot time, 4 weeks, 6 weeks. Frankly, in India today, we can give loans in less than a week. Mortgage loans I'm talking about. Right. And it is a magic. I was there in the United States last year, and I did ask few of my colleagues who work with JP Morgan, who works with Chase and other banks. So they don't do loans in 5 days, mortgage loans. United States, being so evolved country, they don't do loans in 6 days. India is beating, I would say, world's best countries in terms of mortgage loans. So what else do we want? Now, the expectation if mortgage loan is that we want to do in 2 hours, right now I don't have visibility of 2 hours, but yeah, at one point we will reach that mortgage loans when India's all legals and valuations and property records will happen online, and which government I think is working very hard to get them.
Being into mortgage, I completely, buy your statement. I'm of the same page. Maybe we can open the session for the questions. Any?
All right. Yeah, do we have any questions? Wow. Okay, finally. All right, can we...
See, tier 1 customers, how we are saying tier 2, 3 and 4 customers, then what are your views on those customers? As they get growth, are they SIP1, are they ease rate, or they are ready?
My sense is, and I'll give you a very apt example on this, my sense is they are my favorite customers, tier 3, tier 4, because my father stays in tier 4, tier 5. For a very simple reason that lending is a business of risk, and in risk business, what happens is there is something called fear of God. And that fear of God comes from your neighbors talking about you, that he's taken loan and default is happening. And I think tier 3 and tier 4 cities, people still have that, and there is society and there is, familiarity of each other. In metro cities, in Delhi, Bombay, I've been staying in metros for about 15, 18 years now. Nobody knows what is happening on the 3rd floor and 4th floor. And also access to customers. When an elite customer takes loan in Worli and then goes away, society will not allow to enter the... so these are the practical challenges which we see. But when we talk about, let's say, the deeper cities and geographies, my sense is if we have this piece of entrepreneurial DNA built into organizational DNA, when the regional managers and zonal managers and our people on ground, they show that entrepreneurial behavior, I think tier 3, tier 4, and this is the future of India. That's my belief. Yeah. Thanks.
Thanks.
Any follow-up questions on this? Yeah.
Typically ICICI, HDFC and all other these nationalized banks, so they have abstained from lending in tier 3, 4 cities due to their behavior. So we have not seen the cycle of lending in these 3 and 4 tier cities. So what do you think? When will this cycle be over? Can we see another subprime mortgage crisis if we lend heavily in tier 3 and 4 cities?
I would say no. We don't see in India, microfinance has seen some struggle in different forms and fashion. I would talk about unsecured loans more. I have less experience about microfinance, but what I can say is MSMEs in India will not have problem if there is a segregation of the income levels. Let's say in RBI's language, there is something called economically weaker section. Somebody who's earning 25,000 a month and below, that's the section. Now that falls into affordable housing finance. Now that 25,000 per month income is also good in certain ways. But if somebody's income is 5,000 rupees a month and it is microfinance and somebody is doing unsecured with the models which are not working, that I'm not expert of. But MSME who is making cash flow, who's making money and balancing the expenses, 100% I'm sure that in India, as I said, the potential is immense, and at least I see zero risk in that, especially when the collateral is attached. People in India are also emotional about their collaterals. कोई अपना घर खोना नहीं चाहता है, and this is what we have seen time and again, and we are seeing again in future, that if you take SORP, self-occupied residential property, there are very, very minimal chances that somebody who's staying in the property would like to go away from house just because he or she is not able to pay EMI. India has second asset called gold. EMI will come from anywhere. I mean, if the asset is right. But if asset is ghosla ka ghosla somewhere, then plot which has no boundary, nobody can identify the plot. And I think that's the risk management which we all need to do, and all NBFCs are doing it well. I hope we'll be able to do. And for last 18 years, I'm doing NBFC stuff, and I've worked with India's largest bank. I would vote for NBFCs. NBFCs are becoming large now in India. Thank you.
All right, great. Any more questions from the audiences?
I can ask more questions if you say so.
No, I mean, as long as you have questions, you feel free to ask because, yeah.
How do you think we can enforce these mortgage properties in tier 3 and 4? Because I don't think there will be many buyers for those properties.
So it's a patience game. I mean, it's not an impatience game. In the business of lending, any company who wants to do lending, and if it is not a short-term thinking, collateral eventually, thankfully in India, collaterals are appreciating only. I mean, the appreciation rate can be slow, but collaterals are appreciating. It will always protect us, and I deal with this day-to-day basis. If you have collateral, which is clean collateral, disposing of collateral is not very easy, but I think our full marks to Reserve Bank of India and policies which allow us as principal lenders to eventually liquidate properties in a rightful manner. The only thing which I think professionals miss is patience, because everybody wants quick results. If you have a collateral with you, and first you write off money in your mind. If the money is written off in mind, then of course, written off in papers and nobody is going to go and collect. But my sense is collaterals are always safe if they are right marketable, title clear collaterals. Nothing will happen. Yeah, some provision release and all that will happen, which governance allows us, but it will be always safe.
I like to add here is that, we are not actually lending basis collateral. We are lending basis cash flows. That should be our, first thing in mind when we go out and lend in the smaller semi-urban rural market. Collateral is something which is additional. So our lending should not be based on the fact that we have a collateral which, tomorrow in case खराब हो गया तो मैं collateral तो in cash कर ही लूँगा. It should be more about the cash flows, understanding the business. And if we are right there, I think we are talking about 2-3% of default. And I'm sure, when you lend in these markets, this is something which you can take care of. So it is more about understanding the customer. You cannot go digital. You cannot go very fast, when you start lending in these smaller towns. So it is more about understanding the customer, managing its cash flows, understanding the cash flows, and then lend. Collateral is not more than maybe 1-2% where you need to go out and then as Pankaj rightly said, if you have an SORP, you would be able to, encash that. So it should not be that much of trouble and will not, at least make the business, your business, the NBFC business go off.
So any logic that why this surface is not applicable on less than 20 lakhs cases?
That comes from the idea that you are lending to someone who is very small, very poor, and for that matter, RBI doesn't want you to go out and not give him time, or being a NBFC, a larger player, having a lot of machinery with you, go out and take these surfaces. So they want that, you have done your due diligence, you give them time, and there should be some time for you to go out and get the arbitration done and then get the property in possession.
I think RBI should answer this, and someday I hope they expand that to SARFAESI to less than 20 also. I'm not sure.
You see, housing finance SARFAESI is allowed that, because then you are going to buy a new property. You have, you're doing something which is purposely, you have purchased a new property and taken a loan over it. But when you are taking something for the business side, maybe they want us to, the NBFCs, to give some time in terms of, getting this. But as he said, that maybe some time they will realize and then reduce it further.
There's
to the
a cap
NBFCs.
on NBFC portfolio also, that below 100 crores NBFC cannot
But that is, I guess, more to do with enforceability. But then, as he rightly said, maybe we have to answer. Go and check this with the RBI, not with Pankaj.
Thank you.
All right, thank you.
Thank you.
Perfect.